Luna, the cryptocurrency powering the stablecoin TerraUSD or USD, was trading at over $80 just 10 days ago, and it's now been reduced to a fraction of a penny. So what's really happened here and what lies ahead for Luna and USD? Benjamin Stani, Business Development and Sales Director at Matrixport, joins in to talk about just that. It's great to have you again with us, Benjamin.
Thank you for having me.
Let's start with the basics on TerraUSD and the Luna. The USD, it's an algorithmic stablecoin. What exactly does that mean? How does it work? How is it different from other stablecoins like Circle and Tether?
Well, let's talk first about the collateralized stablecoins because they're a bit easier to understand. The two most popular you mentioned are USDC and USDT, and together they have a market cap of around 130 billion. So there's clearly demand for those. The way it works is very simple. The issuing entity says we've got liquid assets worth the equivalent of $1 on balance sheet for every stablecoin that we issue, and you can come to us at any time and exchange your coin for $1 in fiat. Now there's a decentralized version of this as well, and they're using crypto assets, but in essence the logic is the same. Every coin is backed by assets on the balance sheet. Now the other version is the algo stable coins, and they're a bit different. They're backed by the promise to be able to exchange one stable coin for the dollar equivalent value of another crypto. And in the case of UST, that was Luna.
Well, USD is theoretically supposed to be worth $1 each. So how did it lose that dollar peg, and where does Luna fit into this? And what's led to Luna's value collapsing?
Basically, you're always allowed to exchange UST for the dollar equivalent value of one Luna. And there's the catch, because that creates a twofold problem. First, the Luna that you receive when you exchange UST is being minted out of thin air, and it thereby increases inflation, and so the value of every other Luna goes down a bit, just because the network didn't get more valuable by just increasing the supply of Luna. Then of course you wanted a dollar, so you didn't want a Luna in the first place. So you're going out to the open market most likely and selling that dollar equivalent of Luna for fiat. Now that mechanism works both ways. So on the way up, people have to buy Luna to mint UST, and that's pushing the price higher. Whereas on the way down, the inverse happens. The second problem is, however, a bigger one, because there's a bottleneck for these swap transitions that happen on chain. And this is where the peg broke. Something caused stress to the system. Then people saw that they couldn't convert the UST into Luna fast enough, and so they went to centralized exchanges to sell their UST. The price for UST started to drop, which caused even more stress. Then panic happened, and then that created that death spiral.
The Luna Foundation Guard, the organization that supposedly supports Luna, said that they would step in with Bitcoin reserves. Yet we've seen that USD dollar peg crumbling.
Yes, that's right. So obviously what's happening and that risk of a death spiral was very well known to the Luna Foundation Guard. They were aware of this, and so what they've tried to build a Bitcoin reserve in order to prevent that death spiral. The logic was that either you can convert the UST into the dollar equivalent of Bitcoin, or they would use the treasury to defend the peg off-chain. Now that Bitcoin conversion wasn't ready yet, but even if, what we witnessed was that the pressure was just too large, and once panic broke. At the peak, we had about 2 billion of UST outstanding, and that was backed by just less than 2 billion of BTC.
And there have also been allegations that Citadel, BlackRock and Gemini are behind the UST collapse. Your thoughts?
I personally doubt any of the aforementioned TradFi players was involved. I think Gemini even came out openly and denied any allegations. But that doesn't mean that there was no centralized actor behind it. They withdrew liquidity from the 3 pool on a decentralized liquidity pool that made it very vulnerable, the system at that point. And therefore, what could have also happened is that people just saw that, panicked, and then that cascaded down into causing more and more panic and created that self-reinforcing mechanism. So while there's speculation, and I believe there might have been a centralized actor behind it, even that's not fully known yet. Whether it was a centralized actor or it was just a breakdown of the system because of panic, doesn't really matter, because if it was a centralized actor, somebody would have come out and exploited that trade, just like what George Soros did with the Bank of England. So it's in a way, it was a flaw in that system, and that just got exploited.
We still have so many questions and there's so much more to discuss, but for today, we'll leave it here. Thank you so much, Benjamin, for joining us.
Thank you very much.